So most financial statements, or all other financial statements really, other than the statement of cash flows, is prepared on an accrual basis. And what accrual accounting says is that a sale should be recorded at a time that the product or service is given to the customer, not when the customer pays. So if we sell a product or service to a company in year 1 and the customer doesn't pay until year 2, we're going to record the sale in year 1. The recording of revenue does not depend on when the customer pays. And so the income statement, the balance sheet, all financial statements are prepared under accrual basis, with one exception. The statement of cash flows is prepared on a cash basis. And what the statement of cash flows does is it reconciles beginning cash for the company, whatever cash amount the company started with at the beginning of the year, to what it was at the end of the year. It explains the activity from beginning to end. And it's organized into 3 categories: cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities. And we'll talk more about these categories in videos that follow this. But for now, I want to talk to you about why understanding the cash flow statement is important. Well, I think a recent Wall Street Journal article highlights the importance of the cash flow statement. So in a recent article titled, "Coronavirus Shows Cash is King, Even for the Biggest U.S. Companies," the authors of the article highlight how companies during the pandemic, due to the uncertainty related to the pandemic, companies began to conserve cash. They did things like suspend dividends. They stopped paying dividends to investors. They suspended stock buyback programs. And so the intention of all these changes during the pandemic was to conserve cash. Companies were mindful of maintaining an adequate level of cash in their balance sheet so that they could respond rapidly to any uncertainty that might arise related to the pandemic. So this highlights how important cash management is. And if you're trying to understand cash management, the first place that you'll go to as an analyst is the company's statement of cash flows. So the statement of cash flows is vitally important for you, the financial statement analyst.
Also, don't forget to like and subscribe to our YouTube channel so you can stay up to date with our latest content and tips for the exams. Dive into our collection of free prep videos and materials through the links provided below.